Hello, my friends. Today is January 29th, and this is my January FOMC debrief. Now, before we talk about what happened today, let's level set a little bit. So, the last time we had an FOMC meeting was in December. And December is one of those meetings where you get a dot plot. And at that time, the Fed sent a pretty hawkish message there by penciling in fewer cuts in 2025, so this year, than the market had expected. And since then, the market has been pretty hawkish, pricing sometimes only one cut this year, 2025. But more recently, we got inflation data, CPI data, that was much better than expected. And then we had an important FOMC member come out and say that, hey, if inflation continues to be this good, maybe we could cut rates sometime in the first half of this year. So the market began to price in a little bit more dovishness, and heading into the meeting, we were pricing in two cuts this year. Now, the meeting, first, before we get into the meeting, we got the FOMC statement, which surprised the market immediately. When the market saw the statement, the bonds began to sell off, so rates began to come up a little bit because the statement had made two interesting tweaks. First off, they had changed the labor market language to show that the FOMC thinks the labor market is strong. So basically, not too long ago, they were worrying about the unemployment rate rising. Now they think the labor market is fine. Again, that's hawkish because if the labor market is fine, then you don't have as much reason to cut. And secondly, last time they had an FOMC statement, they were talking about, inflation is making progress, but they deleted that progress part out, which is kind of surprising because we did have progress, right? CPI was better than expected, but that made the market think that the Fed is, not happy with inflation, and also that the labor market is stronger than expected. So they were immediately thinking a hawkish Fed. But that turned out to be a head fake because heading into the meeting, we actually got some more clarification from Powell.
Let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal.
As you can see, Powell just kind of shrugged that off and said that, we just wanted to clean up the language a little bit. I don't know. It seemed like it changed the message to me. But when the market began to understand that, Jay is just wanting to have a shorter statement, the market began to, again, relax a bit. And we saw interest rates come back down, unwinding that sudden knee-jerk move higher. Now, in the press conference in particular, this was, I think, widely expected to be a very uninteresting press conference because the market was pricing in basically no change, and so nothing really interesting could have come out of it. But Chair Powell was asked on a wide range of topics, and a few of them I thought were pretty interesting. First off, more recently, the Fed put out a statement that they withdrew from this global central bank alliance about greening the financial system and so forth. Many people looked at that and said, this must be because Trump won, so the Fed is adjusting. But Chair Powell actually gave a different answer. He basically said, this alliance here was about all this environmental stuff, biodiversity, pushing banks to be greener. That stuff is just not in our mandate. And I've been trying to get out of this, and this is something that took time to get out of. It just so happened that the moment that we withdrew was also coincided with the Trump presidency. I don't know if I believe that. I mean, that's what he says. But I imagine if we did have a President Kamala Harris who was all about the Green New Deal and so forth, I don't know if Chair Powell would also be able to would be withdrawing from that committee. I don't doubt that he wants to himself, but I don't know if the Fed would be allowed to. So again, he's saying that it's not because of politics; it's just the timing. But I don't know about that. Okay, the second thing that I thought was pretty interesting was, of course, a lot of commentary about the relationship between Trump and Powell. Now, Powell made made a point that he has not spoken with the president as well, and of course did not comment on tariffs or anything like that. Now, in contrast, this same day today, we had the Bank of Canada come out with a meeting and a monetary policy report, giving a lot of detailed analysis about, what a tariff scenario would look like to the Canadian economy and potentially to policy as well. So, thought that was pretty strange. I totally understand that Powell doesn't want to have a horse in this race, can't comment on politics. But come on, that's like the elephant in the room. It's going to have a big impact on the US economy and monetary policy. So, of course, he has thoughts on it. He's just not sharing them at the moment. Another thing that I thought was interesting was comments on quantitative tightening. It was good that a reporter asked Powell about his thoughts on quantitative tightening. And this is the only part in the meeting which was actually very much scripted. Let's take a listen.
Let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample.
So as you can see, that generally speaking, Powell was just basically having a conversation with everyone. But when it came to QT, he had a written statement prepared. So this is something that is deliberate, something that he anticipated being asked on, and something that he wanted, he didn't want to mess up. So this is very much part of policy. And his answer is that QT is going well and it's going to continue. He doesn't really see any reason to stop that at the moment. And that's what I've been telling my subscribers as well. The last thing that I thought was interesting was right now, the Fed is undergoing a monetary policy review. And one of the things that we do in a monetary policy review is not just talk about how the Fed implements monetary policy, but goals as well. Now, when inflation was very high, you had people talk about maybe the Fed should raise their inflation target. After all, why would we want to create all this suffering and unemployment simply just to get the unemployment rate back down? Now, this is what Chair Powell had to say.
I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal.
As you can see, he's very adamant, telling everyone that, yeah, we're going to change monetary policy, how we do it, maybe, but we're definitely not going to change the inflation target. Now, not too long ago, the Fed also explicitly released a statement that explicitly stated that they will not change the inflation target. It will remain 2%. What's likely to change, in my view, is the asymmetry in inflation, whereas the prior framework was designed for a low inflation world such that the Fed would not preemptively raise rates even when the unemployment rate was very low, because they thought, inflation's not a problem. They're probably going to take that asymmetry out, whereas going forward, the Fed would be willing to maybe both raise rates preemptively when the unemployment rate is very low, and also be no longer be asymmetric in the application of average inflation targeting, whereas in the past, in the current framework, the average inflation rate target is asymmetric, whereas when inflation is above target, that's okay. But if it's ever below target, they will commit to have it above target for a few years. So that asymmetry is probably going to go away as well. We'll find out in the coming months. All right, so that's all I prepared. Overall, uneventful meeting, but we did get some interesting tidbits. All right, talk to you all this weekend.